No. So these highs are relatively smooth in here. They don't look as clean on ES. Overall, I'm still bearish, obviously. We've got the daily low. So we got this daily low here on Nasdaq. You can see how in close proximity we are. However, ES has traded into its internal low in here, and then obviously into this range. So this up close or down close candle, sorry, in here. I'm not too confident on a draw today, whereas, for example, yesterday and Wednesday I had more idea of lower prices. Today we're at an extremity of a range. We've tried to trade to this sell side. We came back above previous day low, so we're back above that now. So again, it's just see what 930 does. If we see something like this, then this buy side will bring to my attention. If we stay within the range, let me go on a different time frame. If we stay under this consolidation here on Nasdaq, then obviously sell side is still with a draw. Obviously I'm not too bullish right now, just because of the fact we're in this sell model in terms of this leg here. So we'll see what 930 does. But we got an hourly inefficiency here. There's a volume balance in there, so technically this is the hourly inefficiency, which we're already trading into. So my bias basically is determining on this hourly inefficiency. If we either trade above this high and displace above it without trading into this, that will be a breakaway gap till buy side. If we get through it, then I would like to see you as support and continue for lows. Due to it being a Friday end of week, I'm not really expecting us to trade into sell sides too much, considering we got a very high impact news next week with CPI, NFP and unemployment claims. What am I doing? TGIF 80, 70. So yeah. So yeah, being very patient today in terms of everything. Personally, I haven't really looked at yesterday at all. I booked some appointments or two. Yesterday, because it was the day before NFP, I don't trade the day before NFP, so I thought I would get some stuff done. But obviously we didn't have NFP in the end because of the government shutdown, and it's next week now. But let's just go over it for a minute. What was yesterday? We had 10 o'clock news, didn't we? I liked it. This run higher here is very nice. From here to here. And then premium of this leg. So if you mark out from low to high, you can see how premium is residing above that short-term high. So taking sell side here, run to buy side. That's a pretty nice run from what I can see. Obviously this is all hindsight, so you got opposing candles. This run failures to space over high, premium for range, bearish overall bias. Then I'm guessing on lower time frames this was a clean run. I didn't take a W yesterday. That was from Wednesday's. What the fuck? That was from Wednesday's stream. Just cut it down because I wasn't trading yesterday. It's fade to space here. Low resistance run into these lows again. I don't really know any further targets because I wasn't looking at price. This is a bit awful in here. I know Dodgy, I think, took a paper long, which in here somewhere. I don't know, somewhere here. In this case, in here, obviously we failed to space above this high. We returned into this potential breaker, and also we created relative equal lows down here. So trade to a short-term premium, target relative equal lows, and then we get the actual move to the premium of this range. Awful price delivery in my opinion in here. Yeah, not great. You can obviously see we return into inefficiency here. Again, we return into inefficiency here. And trade lower, but again, it's just hindsight. Full port. Full port NFP, motherfucker. I'm joking. Yeah. Full port market open then. Other than that, I'm not really looking at much. We're inside yesterday's. Actually, a level I would have on my chart. I'm going to put it on this chart because my other charts are a bit full, not gonna lie. Where are we? Is that right? Wait. Well, we're going to have a massive gap opening higher. So, I think I would have on my chart is that gap. That's yesterday's. I might put dots on that. That's yesterday's RTH gap. And today's RTH gap is going to be that. But it's not. It's going to be that. That's going to be a long day. That's the current RTH gap. Put these onto a 1 minute only. So again, coming into our open, obviously on the hourly chart, we've got these highs marked out, these lows. Drop it down onto a 15 minute. I'm going to go onto a 5 just for. Got buy side above there. Got sell side under these lows. And sell side under these lows, which is paired with a hourly inefficiency. And then beyond that, we've got sell side under here and buy side through this range here. So these were our more buy side targets if we get through it. So look at all this overlapping candles pre-market. I don't like that. Coming into open. personally, I want this sell side to be engaged. Overall, let me put on a 5-minute and below. Something like that would be a quite nice entry model, but you also have to think that it's 500 points and it's a Friday. Are we going to get that? Probably not. So to me, this looks quite range bound conditions. Like, it will be overlap before open, that you can see in here. So I'm just going to monitor how we react at old lows and old highs to determine a bias. Let's go. That's hiding there, engaged. Got 2 minutes to open. That's also engaged. YM is traded into these highs. You can see YM up here on the right hand side. SMT at these lows with NQES. SMT at these highs with NQES for YM. So that's the RTH gap. Watch 50% of that. That's paired with the hourly inefficiency, or coming down. Pay into the space. Look at body candle closing. YM is rallying in here. SMT at these lows, obviously still with ES. ES is trading towards its highs in here, or higher in its range. So we got SMT at these short-term highs in here. So if I mark out that SMT, see why I'm still pushing aggressively since open. You can see why ES in here. Still nothing got my interest. We got 10 AM news. We trades to 25% of RTH. Closing candle. Okay. I like to run down into this low in here, but it didn't give me what I wanted to see in terms of a fair value gap to get in line with it. But to see how we respond at this low, this is also the hourly inefficiency. So buy side, ES is obviously with SMT have lows here, so ES is into these highs now. So is YM, and then you can see NQ following through that. Again, both indications here. I was looking for a long. I was looking for a short originally in here on a lower time frame. No fair value gap offered. Again here, no fair value gap offered, and I'm not dropping down lower than a 5 second to get in line with the bias. So no execution. You can see, let me get this chart up. ES trading higher in there, so you can see that hourly inefficiency in there on ES we're trading up into. So YM's obviously the strength leader here, then ES, then Nasdaq's the weakest. So these lines here, these dotted ones with fib numbers next to them, that's yesterday's RTH gap. Yeah, it was a very quick expansion there. I couldn't even get in line with that bias. We're on a 5 second chart, so it's fine. It's okay. I'm not. I had a limit at settlement, but removed it once it got edged at 9:30. But it seemed like we still ended up reaching for it. Yeah. Seeing how we respond out of these two inefficiencies on Nasdaq. that. Shame you can't trade gold on anything. No, you can on most firms. Apex has banned the complete trading of gold, so you can't trade on that. Top Step, I think you can trade micros, can't you, on Top Step? Well, on Nasdaq, no. ES did though. ES did really well into it. Are you using a prop firm? You need to purchase data for CME group. If you just want, like, if you don't want delayed data, if you just use like a CFD, so for example NAS 100, or just use NAS 100 on forex.com, that will give you live data, but it won't be as accurate. But yeah. So notice how, okay, 1 second, so we trade into 50% of yesterday's RTH gap. If you look, so we had the S&T have these lows. Let me clear some of this up. Let me, sorry. I should have held a runner on this, but it's fine. So that's yesterday's RTH gap. I'm just going to drag them two over. In here, you can see we return into this bullish fair value gap on a 1 minute. You just notice how some of it gets left open. We have relatively equal highs here with this high and this high. Turn down into it. Yeah. And then on this candle, notice what we do. Create this wick, fail to trade down to consequent encroachment, come back above the opening price, and then run into that liquidity pool. So I'll show. So for example, this run here. So that's the first execution. So this inefficiency, trading into, then this wick, 25%. Right. Once we close on that 1 minute candle up there, so we close it here, open a new one, trade lower into that 25%, failing to get to consequent encroachment, holding the bullish fair value gap. Then once we get above that down close candle there, that's where I'm entering. So you can see just inside of that. Stop inside this gap. Sorry. Targeting buy side. It was around here. What? That's a really bad feel. What here? I went to longs, but we yeah, I know. I was looking for longs as well, and I could not engage in a long where we had that. There was, like, I couldn't even get onto it on a lower time frame. So it's fine. It's okay to miss. Yeah. What I should have done is held a runner up until this high, but it's fine. It's a Friday. I'm content. Well, if it creates a long wick site inefficiencies, so it's really hard for me to explain because in my head it all makes sense. But once we create this wick, wicks are classed as inefficiencies. Like, ignore what time frame I'm going on right now. 1 second. Let me just. Or wicks are balanced price ranges, I should say, is easier. So, for example, where this wick high was created to wick low, this range here, we've had sell side delivery through it, and then buy side delivery back through it. So, that's the balanced price range. With balanced price ranges, you don't want to see 50% breached, or we're just reversing or going into an opposite direction. To unfill 5, high time from S&T. Is unfill 5 under there? Well, technically we've already traded into the 5 minute now. Technically. That's the 5 minute already engaged. By ICT's definitions. So in here, sell side taken. What I'm just looking at basically is we've swept sell side, we didn't close beneath it, whereas buy side we've closed above it. I just don't have any really significant buy side targets in here, considering we have S&T here as well. Okay, so the candle reaching for it, if the candle after that is going to below 50% point. Yeah. Because what you want to see is buy models to play out when bullish. So for example, once we tap into a discount array, when we create another discount array, that should support price higher. It's like a stepping stone. Continuing. So we trade into that 5 minute fair value gap. I want to see if we can get into that buy side there. So watching how we trade at this old high. And then this is this buy side up here. So now, obviously, monitoring this high. Like, this is kind of what I'm doing constantly. Monitoring what we're doing above this high. On lower time frames. See, we sweep in there. Got inefficiency in here. So fade into the space at high there. So that's indicating a short-term discount. Where's discount? This inefficiency. Potential down close candle. Gap in here. So watching if we create a wick here on a 1 minute candle and then expand, when we get through 50% of this wick, you would want speed. So you basically want speed through this entire range and then obviously through this high into that buy side. So see how we respond to that consequent encroachment. Expansion now, really. Hint, if you it has been streamed on my YouTube technically, so you can watch it on there. It might be a bit delayed. So watching this down close. I'm not a fan of this too much, but as long as we're staying above this. Easy PA to read. So now obviously see speed above this high. I wouldn't want us to sweep like this. I want speed through that high. You wouldn't want us to come deep within this range now. Nice job. I'm not gonna try to say it name. Zax. Zax. I want speed now. Higher. Through that range, looking at lower time frames. Or speed down. That works too. See where this wick forms. What was that volatility injection? And now see if we go to buy side. So see how we're still respecting this down close candle, but we're got a big volatility injection here from, like you can see, within 1 second. That's 40 points in 1 second. So good luck if you're in a trade, trading on a lower time frame. Still respecting this bullish fair value gap, and then these other down close candles I'm kind of monitoring. I'm not liking the stalling as much. ES is continuously running highs in here, so do have S&T. Now see how we respond back into this old high. So, oh, sorry. I'm just monitoring how we are trading there. Let's see. So, see that fair value gap to that buy side. I want to show you. So you can see here. So buy side. So here, long into there. That was that lower time frame I mentioned in there before, and then bullish order flow, enter in a bullish fair value gap there. Down close candle. Trade it into that high, partial at this internal, or this technically internal high, but external with the current range. Then stop at break even. So stop is here under this low, which was formed in a fair value gap. Wick down here, respecting these down close candles. Trade higher. We get that huge volatility injection, which I'm kind of lucky I didn't get stopped out on. And then as soon as we create this swing low, I'd move my stop under there and then trade it into that high. So there are the only 2 executions. So that is a total of 30. It's about 90 points overall. You can see all opposing candles supporting price. Once this sell side. Originally I was looking for a long here. I said, and now you look for buy side. I just couldn't get an entry in this run up until this internal high. So once we created relative equal highs there, I found another opportunity to get in line with that. Then in here, or in here. From returning into the 5-minute fair value gap, like look at this 5-minute. This is where 5-minute breakaway gaps form in terms of, you just go on this chart. You see how we have this is the fair value gap which most people will mark out because that's the fair value gap. But what ICT actually teaches, actually I'm going to mark that out with red. So that's the fair value gap most people will draw out. You see there's a volume imbalance in here. You should include that. So we then trade down into that inefficiency, leaving that as a breakaway gap, which suggests we are bullish. In here, I mentioned about us trading under these lows, and how we swept this low. We didn't close under the low, but in here, we then closed above the high, in here, return back into the old high, the old range. Anything within this range is a balanced price range. That's your breaker. And then we expand towards the buy side target here, and the unfilled fair value gap here. Like, you can see by, like, for example, these trades, I'm not aiming for loads. Like, these are not aiming for a lot at all. There's 30 points there. 35 points there, so that's 60 points. And 65. Partial. And then now you can see how we're closed under that inversion. So now discount arrays are starting to get closed under. So we trade into, let me sort this out. Trade into that buy side, we get the inversion. So that's a more high probability inversion with a break-even point here. But you can see as soon as this high, I know I'm going on low time frames, but as soon as this high is formed, right, in here, notice how every single discount premium array gets respected. How we go into the sell program, how every PD array, for example, inversion, we close under it. We start delivering price lower and respecting every single up close candle when bearish. You can see that I might be able to make it cleaner if I do this. But this is the premise of looking at it on. So yeah, that's a second. So you can see how every single PD array starts getting respected, going lower. Up close candles, fair value gap. In here, return back to fair value gap. Consolidate before taking this old low, or we take this old low, consolidate. Run lower here. Fair value gap, breakaway gap, fair value gap, up close candle, fair value gap. Immediate rebalance, fair value gap, and then we're running down into discount lows, right? That's how sell programs play out, and or even on the buy side, right? Between an old low and an old high, you want speed through that range, and where you want speed, that's when this will play out, this spooling of price. Right, and this is on a 1 second chart, but like it's just annotating that reversal. And then you can see that inversion then leads to close under that low, then we create multiple inefficiencies. If we're bearish, one of these inefficiencies are going to be on a breakaway gap. But I'm not too bearish personally, but what's your exit strategy? Yeah, we got 2 minutes till news. It's not the reversal of your entry model. I'm seeing the breakaway gaps for the trace for entries and trading profits. I'm seeing multiple PD arrays against the trade. You mean water falling but still long? So if we're going lower, for example, if I was bearish bias, what you want to see happen is us returning to an inefficiency, return beneath this up close candle, use it as support, and then continue trading into lows. And then see if we can get through this inefficiency, and then use that as an inversion, and then trade down into towards current new week open, current RTH gap, consequent encroachment. And with some of these gaps staying a breakaway gap. So preferably, for example, breakaway gap, because that's at 70% of the range. So if we look at the implied dealing range from high to low, in the upper portion there'll be a breakaway gap. I don't like that too much. We didn't close under that low. See what goes on. And then discount targets. If we are going lower, what do I look for? Okay, we got current RTH gap, consequent encroachment, which hasn't been traded to. We got this old low, which is that old 5 minute range in there, not including the volume imbalance. We got this short term low here, so you would want speed through that range preferably. And then we got sell side under this low from 932. Wait, go left. Change type in your thing, NQ H 2026. Yeah, that one. Press Control R. Press Control R. Reload that. Yeah, mine's fine. Oh no, it's not. Okay. Ooh, what the fuck? That's literally recent because mine was working a minute ago. Oh no. Oh, okay. 1 second. It's something to do with CME data. So you can see we close under that out close candle. Now I'd want to see if we use that as support to continue into this low and then this low, and then that should be used as an inversion. Give me a sec, let me do some research. I need to go for 5 minutes, but let's see that play out. Hello, so I'm back. So you can see how we're still doing that under these lows. Now we've got two more up close candles. You would want to see them used as support to continue lower into sell side under this low and current RTH gap midpoint. Notice how we use, let me get rid of some of these lines. We use this fair value gap here, leaving these two as breakaway gaps. Notice the 5-minute immediate rebalance. You would want speed through this wick here because it's technically a protected low in terms of for a higher time frame. We've already took sell side in there, so this rejection block here, that would be a partial for me if any shorts up here, because this may become more high resistance to get through. And then it's also the RTH gap high, so these can still be used as discount arrays for targets. So the high, the upper quadrant, the consequent encroachment, the lower quadrant, and the low will still be used as discount arrays in the future. I'm honest with that range there. See how we use this up close candle, see if we get beneath it quickly, and then use that as support. To the sell side there. Not a fan of a failure to displace beneath this up close candle in here. What would invalidate this trade idea is a close above this swing high. Cycle quickly. Didn't close under that 5-minute fair value gap. 30 seconds. Yeah. Really the highest I want to see it go is 50% of this wick. Here's that blue line, which can kind of narrow it down to 50% of that wick. Candle body closing. Yeah, responding to 50% of that wick. Being in this if news wasn't during, yeah. Personally, where your entry is on that trade, I would potentially be break even there. Like, I would put my stop to break even where it currently is there. ES is a lot stronger in here. You got YM taking new highs here, so NQ's the weakest, trading above this premium array. So this 50% of a wick, so that's the first invalidation. Second invalidation is this high, third is this up close candle. So we trade into that 5-minute rejection block in here. And then failed to displace back beneath this up close. And then I haven't took anything since there, but I'm just watching. Obviously, you can see the algorithm starts delivering higher prices in terms of within this short-term range, where every down close candle then supports price higher. What you would have wanted to see is something like that, and then start closing beneath up close candles. So it didn't close above that high. This is what I'm looking at here in terms of this. You got ES took it this high, so S&T at them highs. YM's taken new highs, so any shorts aren't really favourable with. You got YM rallying and then ES above this high. So even though shorts on that Nasdaq, if you're going to short an asset, Nasdaq is going to be the best to short right now because we're weaker. But it just becomes more high resistance or low probability when we got YM rallying and ES being stronger. You can see we didn't close above that swing high. Break evens. Fucked. On a 5 minute, I wasn't looking at 5 minute, not gonna lie. For 5 minute, there's a 5 minute fair value gap there, which looks really clean in hindsight. Hindsight 2020. You see there. In a market maker sell model, if this is a market maker sell model, this is your second stage redistribution, where we've had low risk sell, reaccumulation to target. Oh, you would want speed under this low, the sell side. C fades to close. I'm going to remove that line. I'm going to remove these annotations for a moment to clean this up. Right side label. You can see the failure to displace beneath this low. That's the first indication that we might get a retracement or a reversal. If we're going lower, you want speed away from this range. I'm in here. What I'm looking at is we took sell side, we took buy side. We're in middle of the range. What I'm looking at. Yeah, I stream here basically every day. I trade opposing candles. So, for example, if I'm looking for the lower prices, then I would look for up close candles. If I'm looking for higher prices, I'll be focusing on down close candles. But it's all ICT. Who do I take trades? No. I don't take any trades. I just comment on price. I don't know what it's going to do next. You took any trades today? It's immediate rebalance. The ES in here. Putting into this inefficiency. YM is still highs. I don't want to be married to this bearish bias of this low, because this low is very protected in my opinion, but it would have been nice to get down to. We've got buy side up here. Obviously we can't see it, but there's buy side at that level. We can't see that high, but this is all buy side. Go on M&Q. Yeah, these highs here. That's what that is in correspondent to. There. But obviously, Nasdaq's being Nasdaq. That's trading above this short-term high into the high of a 5-minute fair value gap. Turn it back into that inversion. That's the inversion. Yeah. What firm are you with? Yeah, we trade at this short-term high. Let's see how we respect down close candles. I still don't favour buy side here. In terms of this high has swept previous buy side, this low has swept previous sell side. So this is going to be a more high resistance range in what we're in. There's nothing for me to call out now. Overlapping candles. Completely. Yes. Just go on to micros if you want to view that price action. A little annoying. They don't want to see us. They don't want to let us see candles. The call is overlapping candles in the 1 minute. That's the reason I'm not calling price. So now you want to see how we trade at this high. Fuck for First Nation. What? I'd want some of this fair value gap to stay open if we're trading to this high within this price run. So that's the fair value gap. Personally, I would rather if that. So I would kind of want us to stay above. If we're going to go to a more low resistance run, you want to see the lower half of that stay open and not traded to. And we didn't see trade into it. Do you see how we leave the lower half? I would want, if we trade to this high in here again, I want to see some sort of acceleration of price delivery up to this high. Like you won't want to see us do this, so you don't want us to come back into this high and come back into the range. You want to see us get through that high, use that as support to continue higher, monitoring 50% of this wick. So there's that wicking down into that old high and 50%. Not a fan of that. Fan of this price action now in there. ES is, so if we look at the difference between ES and YM and Nasdaq. Nasdaq has traded into a new week opening gap below. Did I say Nasdaq ES? I meant, sorry. Oh wait, what was that? Oh, it still hasn't given me my price action back. Okay, let me clear this up again because I like to keep it clean. I'm going to get rid of that for now. Get rid of that. This is that old high. That's that fair value gap. You would want this down close candle to be traded through and used as a bullish order book if you're looking for higher prices. Basically, every opposing candle supporting price higher. So you would want to see that. What? I don't know. Got 3 invites and message requests to come into a stream. What do you mean? What's going on? I haven't been keeping up to the chat, but update me. It's the indicator. It's how you make indicators in. Anyway. Yeah, you can stream. Did I get it wrong? You're the one that was. What? No, that is. Yeah, I don't know his name. My guy. My guy is the Jesus, hedge fund manager. Hedge fund. I keep saying that as well, so. Hedge fund. It's because we're British. It's pretty quiet. Who's not here? Yeah, no. I'm not looking at the chat that much, though. The only way I would look is if someone pings me and it comes up here with a. I have a lot of people muted. I've got a whole monitor dedicated to Discord now. To scan for people speaking. Yes. Yeah, I know. That's a really unlucky break even. I know it would have came there anyway, but like look at this price action now. Like this is an area where I have a bias of what I want to see happen, but like it's in a really high resistance condition. So yes. I personally did. I just didn't like it. It's the external low though, as a target. Like, why are we like? There's no reason for us to go down there. That was my only problem. Like this low, if we are going to trade higher, which currently bullish order flow is in play until this low is taken out. Like, there's no reason for us to come down there because there's an hourly fair value gap. But okay, now we've closed above. So you see, yeah. I was going to say, you see how we stayed in the upper portion mainly? We traded once down into consequent encroachment, then we stay above midpoint, waiting for time. And then now I would want to see how we trade through this range. Let me see. Yeah, I did say that's a really nice inversion, but yeah, it is a nice trade. And it has a really nice break-even point, so we have a failure to displace through that range, especially when we take this high. Notice how we sweep that high and instantly come back into the range. That doesn't mean we can't still go higher in here, but it's just still indicating we're in this high resistance run where candles are just overlapping each other. Ali, I'm gonna cry. Oh, that was from earlier. Notice how we come back into them old wicks, fail to displace through there. Like, Yeah, I know. It's just data. It's a data malfunction. It's, yeah, I'm watching that here. So that's going to make it even more high resistance. Like you can see ES is above, YM's above. I do kind of still want to see NQ get there, but it might take a lot more to do that. Like look at these lower time frames. Huh? What? What did you say? Do I have a what? A crush? My ex? No. No. I'm still not over that. I'm still not over. That's the only reason I'm in it. If you would know. Like, literally, that's the only reason I'm in here. I'm not even joking. If that didn't happen, I would not be in this call right now. What? No. But it's when I was on my own, like, after, I was actually really sad. I'm not even gonna lie. I was really, like, sad. So, trading isn't the best idea. On your own. So I joined here. It's a, like, distraction. And then, we're here. Nothing. Nah. We return back to the opening price now. Now, I just want the continued spooling of price delivery through that range. Preferably. Okay, good. Get into my emotions. Inversion? I need my magnifying glass. Jesus. I'm joking. Okay. Yeah. We literally did, bro. I explained this in the moment. Look, fucking include a volume bounce. That should be a breakaway gap. That's the actual fair value gap. Oh, kind of. Oh, it's going to be a long run. I already see this occurring. Like, we return back to this old high. This high is not likely to be traded to yet, in my opinion. We trade to the high of this fair value gap. You can see bodies respecting it. Come back down to this discount. Yes. Yeah. Because what is there? Why? What's the reason for us to come to that low? Look on the hourly chart, right? That low should be pretty damn protected. One, it's sweeping another low. Two, it's formed inside a fair value gap. So if we're bullish, then that's going to be protected. And ES, if you look at ES as well, for example, look at ES in there. Yeah. This could be a sell side run. No, this is some. Yeah. Mm-hmm. Born straight out of the womb. Trump tariffs. Trump tariffs. Tariffs? No, I'm joking. It's only because you're dumping. Tariffs. Trump social. This is normally how I go when we get volatility. Trump? No, 5 hours ago. Not Trump. I don't understand why Trump posts that. It's beautiful that the couple in the White House is actually in love. Imagine posting that about yourself. Yeah. Madeleine McCann. Do you reckon ICT's in the Epstein files? I was so neutral. Oh, my mum's ringing me. 1 second. 1 sec. I'm back. Yeah. Yeah. I said I'm waiting for 9:30 open. I couldn't say I was bullish. I couldn't say I was bearish. Here I was bullish. Once we swept this low, I said now is the time to look for buy side. Um, and then here I was bearish until here, somewhere in that range. That's it. Yeah, it's good. I want to get an entry in this move, but it's, it's gonna run too quick. Yeah. Um, overconfidence. Overconfidence will kill everyone. Will kill absolutely everyone. Once, like, even if you're profitable, once you become profitable for like a week and you were like, oh my god, I'm finally doing this, like, it feels ridiculous. You'll end up blowing all your accounts. You'll end up blowing everything, and that's the killer for most people because it will lead to unable to have a losing day, basically. Um, with like, just follow your plan. Like, you're not gonna win every trade. You're not gonna lose every trade, and you will go on winning streaks. You'll go on losing streaks. You just kind of have to keep the long term perspective in it. Because if you're focusing on daily performance in terms of each day, yeah, you should focus on making sure you follow your rules each day. But profit goals and stuff, I don't think you should have them in terms of within days and weeks. It should be months and years. What's that? Um, breakaway gaps. Wow. No, I like breakaway gaps. You see me, I always say breakaway gaps. I say it technically is. Like for entry model basis, yeah, but what I want to see in price is breakaway gaps. Okay, have a good one. Thought you still streaming, yeah. See how we trade above this candle high. You just down close candle. Again, we're just inside this range. Realised I had to be wrong. Oh no. Oh no. I just realised I was recording this and no. Yeah, I've had the wrong screen on for the last. Oh, it's not that long. 20 minutes. But yeah, I'm gonna head off in a minute. It is already past 11 o'clock, and that's my deadline. The only thing I traded on was one account today, which I've already shown, which is up about 1,000. And that is me done for the day and the week. Next week will be a bit entertaining. We've got sorry, let me recap. We got FOMC on Wednesday, as well as some other high impact news. Yeah, we got unemployment rate, as well as non-farm payroll on Wednesday. We've got unemployment claims Thursday and CPI Friday. So we're gonna get some volatility into the end of next week. And then we got high impact news on Tuesday and no news on Monday. So I would personally set out Monday. Monday of NFP week is normally pretty good. However, NFP is on a Wednesday, not a Friday, so I will not be trading on Monday, Tuesday. I'll trade after NFP on Wednesday, and I will trade Thursday, Friday after news events. So yeah, have a good one, everyone. I'm gonna go join Steve, so give Steve some love. Have a good day.